Hello everyone, welcome to this session on Introduction to IFRS. Though I shared a brief about what is IFRS and what is IAS in my previous sessions. So now I'll be continuing with the understanding of what is convergence and what is adoption. So we had a brief discussion about it, and adoption meant word by word. So for everyone's knowledge, this is Amit Dharnia, and I am sharing with you the knowledge of IFRS to the various standards which are known as IAS and IFRS. In that series, like I am first introducing about IFRS, sharing the insights about how it came into being, what is the purpose of it, who were the people behind it, what is the difference between adoption and convergence. We also understood about the difference between IAS and IFRS. So in that series, I'll be sharing some more insights around adoption and convergence. So adoption simply meant word by word. Why would a country adopt IFRS and why would they wish to converge to IFRS? In 2014, US declared that they will be adopting IFRS now, which was a breakthrough, suddenly expecting all other countries around the world to adopt IFRS. So the smaller countries who did not have a full-fledged accountancy body or who are relying for their accounting principles on other accountancy bodies of the world, I think they felt it is better to adopt IFRS than trying to develop their own accounting standards, since they did not have the required resources like for developing an accounting standard. So all these accountancy bodies work together. They rely on each other for developing an accounting standard. There are exposure drafts from accounting professionals, from corporates, from the academicians around the world. So it's a mutual exchange between all the accounting bodies. So if you'll do accounting at one place, you'll see there will be some similarity in terms of concept or in terms of clarity, in terms of understanding the principle somewhere else. So if I share a brief, like we have a revised depreciation standard for fixed assets, but if you look at IAS 16 property, plant and equipment, it is more or less very similar. So when India actually moved to IFRS in the form of IndAS, there was no difference between the revised AS 10, which was the standard for fixed assets and depreciation, and IAS 16 property, plant and equipment. So it was very convenient for someone who is studying property, plant and equipment, IndAS 1, IndAS 16 property, plant and equipment. It was very convenient because they were already aware of the knowledge. So it's a mutual exchange globally. Definitely it will put the accountancy body or the country into a dilemma, though the country's representatives do not have much say in it. It's mainly the accountancy bodies who decide that whether a particular standard will be implemented or not, or the provisions will be taken as it is, or we would like to bring in some change. It's for the good as well, because every country's conditions, every country's economic conditions, political environment are different. So one set of rule cannot be applied globally, and that was one of the reasons like it was not very popular till year 2000. And ISB understood it when they first took charge as a new body. They understood it. It's not easy to convince the national accountancy bodies or the countries to use one set of accounting standard, but it can be modified a little bit. It can be converged form of IFRS, which helps in maintaining the significance of the national accountancy body, as well as it gives a chance for the national accountancy body to implement IFRS. So they are able to maintain their autonomy, significance, and are able to read through the IFRS and publish their own standards which are based on IFRS, which is converged form of IFRS. So everything has its own pros and cons. Like it is beneficial sometimes, like if you would have directly said that we are preparing financial statements on IFRS. So any country who is preparing financial statements on IFRS, or the users of financial statements who understand IFRS, could have easily understood our financial statements. When we are using converged form of IFRS known as IndAS, it simply means that our financial statements will not say that we are in compliance with IFRS. There will be an explicit and unreserved statement of compliance with IndAS. So the users of financial statements need to be made aware that there is a slight difference between convergence and adoption. There is not much of a difference. So if any country has converged form of IFRS, they can rely on their financial statements, and they are more or less very similar to IFRS. So this awareness is much needed. So in India, we decided to converge to IFRS, then adopt IFRS. US said that they will be adopting IFRS, but then they disappeared. I think they did not say anything after they made a statement that they will be adopting IFRS, but they are still following IFRS in the form of ASC codification. Like I said, they are using IFRS in line with IFRS 15 revenue, in line with IFRS 16 leases, in line with IFRS 9 financial instruments, IFRS 17 insurance contracts. They are more or less converging to IFRS, but they've not changed any codification, but they're using a new codification though, like they were using ASC 605 for revenue. Now they'll be using ASC 606 for revenue. They're changing the codification, but they're not bringing them in line with IFRS. Like when I say bringing in line with IFRS in India, when we thought of changing to IFRS, we did it like this. Suppose there is a standard known as IAS-1. It was decided it will be named as IndAS-1, and if the name was presentation of financial statements, it remained presentation of financial statements in India as well. If there is a standard known as IAS-2, it will be IndAS-2 in India, and if the global name is inventories for it, it remains inventories for it in India. Not only in India, in Singapore, in Hong Kong, in Australia, in Canada, they used IFRS. So everyone's sequence is now same. If there is no IAS-3, obviously there will be no IndAS-3 as well. No IAS-4, there is no IndAS-4. So if the next standard is IAS-7, obviously the next standard in India too will be IndAS-7. So we reached this list till IAS-40. It was IndAS-40. If it is IAS-41, it became IndAS-41. Now, as I said, after year 2000, they changed the name to IFRS, and any new accounting standard which is issued after year 2000 is known as IFRS. And the first standard or the first requirement of the accountancy body was that they need to develop an accounting standard which is supposed to help in implementing IFRS. And there was a requirement for a standard which is standing exactly opposite IAS 8 accounting policies, changes in accounting estimates and errors, because it said that if there's any change in accounting policy, we need to apply the effect retrospectively, which means that as if we have been doing since beginning. Now this was a big hurdle. Now, IFRS 1, first time adoption of IFRS will be used by an accountant or a company only once in their lifetime. It is a standard which is developed simply to facilitate conversion to IFRS. It has provisions which gives us relaxation for applying retrospective application. Obviously, it is a facility standard which is facilitating to move to IFRS. But once you implement IFRS, you'll have to follow the principles of IFRS. That's the expectation and requirement. Suppose there is a property, plant and equipment which is valued at certain amount. There is the option given that you can treat the same value as deemed cost and simply move forward. If it is impracticable to go beyond a point, you can take relaxation that we will not be going beyond a point for some of the areas like business combinations. We do not need to go for recalculating non-controlling interest. We will not be going to recalculate the liabilities which have already been distinguished. So some of the areas there's no point going back and making some change. So there's a clear-cut relaxation. In similar fashion, like if there is foreign currency translation reserve, now which is an unrealized gain or loss, IFRS allows it to reset it to zero because there's no point recalculating it in different currencies at different rates globally, going in the past and trying to bring in a difference like which will have no meaning in the financial statements. So IFRS 1 simply says that okay, reset it to zero. So these are the kind of facilities given in IFRS 1 wherein they allow to move to a new regime of IFRS. Now my question here will be, the next standard is IFRS 1. First time adoption of IFRS. So obviously in India it will be first time adoption of IndAS, and in a similar manner for all other countries like who are converging to IFRS. There it will be the standard for Singapore or Bhutan, for Nepal, for Sri Lanka, Saudi Arabia, UAE. If they are directly following IFRS, then it will be first time adoption of IFRS. If they are using some converged form, like IndAS is the converged form of IFRS, we'll be using first time adoption of IFRS. We cannot issue an explicit and unreserved statement of compliance with IFRS. We'll be issuing an explicit and unreserved statement of compliance with IndAS, because we believe that IndAS is slightly different from IFRS and we've converged to IFRS. Now the question arises, what should be the number now? What will be your suggestion? I would like to think of a number. What shall I decide to coin the term for first time adoption of IndAS? And any standard like which is in the name of IFRS, how should I number them in India? What should be the number? You can even interact through Zoom, like I have given you power to unmute yourself, and if you have any question or if you wish to reply, feel free to reply. Just these sessions are being shared for you, so you do not need to be conservative in approach. Even though I'm sharing it on YouTube, but it doesn't matter. It's a very transparent discussion and we can discuss it. So if you have any number in mind, you can say so. What should be the number? Anyone? I hope you're with me, like you can interact. Any guesses? Like, do you want to guess anything? So if it is IFRS 1 in India, we decided that we'll be coining IndAS 101. IFRS 2 will be IndAS 102. I hope life is easier now. So if it is IFRS 15, what should be the name of the standard? If it is IFRS 15, what should be the name of the standard in India? Any guesses? Or there is no need to guess now, I guess you can simply say so. There's always confusion with IFRS 16. Some people confuse it with IndAS 16. If it is IndAS 16, then what is IAS 16? IAS 16 will be IndAS 16. IAS 17, which is no more applicable today, it could have been IndAS 17. But IFRS standards are beginning with 101, 101, 102, 103, 104. IFRS 9 is 109, IFRS 10 is 110, IFRS 11 is 111 joint arrangements, IFRS 13 is fair value measurement, IFRS 15 is IndAS 115 revenue from contracts with customers, IFRS 16 is IndAS 116. So obviously, if India is going to move to IFRS 17 insurance contract, what should be the name of the standard? It has been recently issued and it is applicable now. Luckily, IndAS, what is the number? IndAS 117 is also applicable. And any new standard which will be developed in future, there will be IFRS 18, it will be IndAS 118, IFRS 19 will be IndAS 119, IAS 19 is IndAS 19 employee benefits, IFRS 19 is a different standard. So we need to understand this difference. Now the best part is that if you are following IFRS, you know in advance that these are the standards which will be applicable in the country wherever there is a converged form of IFRS, and there is an opportunity for the consulting firms to offer their services to such accounting firms wherever there is converged form of IFRS. Like we first helped in implementation of IFRS, and then when IFRS 15 was introduced, we also supported US companies, the companies which were using IFRS, the companies which were using IndAS. They were supposed to move to IndAS 115, then we supported on leasing. It was again implemented in US and IFRS. So whatever is happening today is impacting the companies globally, because FSB and ISB are working closely and they issue their statements, their dates of application. The US GAAP gives more detailed information. IFRS is principle based. We need to use a lot of judgments around comprehending the principles of accounting. So that's where there's a scope of providing accounting service, or there's a scope of being ahead of people. I remember in one of my sessions, like we were discussing leases, we were discussing it around 2014-15, though it was supposed to get implemented later on in life. Like I was delivering a session in 2017 for a group of people who were supposed to do diploma in IFRS, and they were transitioning to IndAS. They were supposed to transition early on. And one of the candidates was very happy because his calls improved, his seniors were very happy with his knowledge. So we can be ahead of people once we know that the next standard which is going to get implemented in India will be so and so. Like IndAS 115 was issued like the week before, that is supposed to be applicable from 1st April 2018. In similar manner, IndAS 116 was applicable from 1st April 2019, though it was applicable globally in January 19 or January 2018 for IFRS 15. So that's how the change happens. How to bring about this change? Now, the change of implementation requires 3 balance sheets, and IFRS 1, first time adoption of IFRS, IndAS 101, first time adoption of IndAS, or IAS 8 accounting policy, changing accounting estimates and errors. Now, these 3 instances, like there is a requirement of a 3rd balance sheet. One is change in accounting policy, that if you change an accounting policy, you need to apply the effect retrospectively, correction of a prior period error, So these were the requirements of IAS 8 accounting policies. Now, as I said, IAS 8 was the hurdle for changing the accounting policy. Applying IFRS or IndAS for first time. So in these 3 instances, we present 3 balance sheets. The only difference between adoption of IFRS or convergence to IFRS and change in accounting policy is that there are relaxations given by IFRS 1 and IndAS 101 to move to IFRS or IndAS. There are relaxations given. Otherwise, IAS 8 was sufficient enough. All the countries, all the accountancy bodies would have easily agreed if they were ready to apply the effect retrospectively for all the items in the balance sheet. They did not agree to it is the reason there was a facility standard introduced, first time adoption of IFRS, a unique concept used by an entity only once. It requires 3 balance sheets. Suppose an entity is supposed to present balance sheet of 31st March 2025, which is supposed to be based on IFRS. The IAS 1 presentation of financial statement says that you need to give a record of what happened in the past. You need to give a comparative figure, because if you do not give a comparative figure, then there's no point publishing a financial statement, because it cannot be compared. There cannot be any analysis done on the basis of what you are presenting. So there is supposed to be a comparative balance sheet. So 31st March 2024 is also supposed to be based on IFRS. So if the government says that it is applicable mandatorily from the financial year beginning 1st April 2016. There is a big catch, like it is applicable from financial year beginning 2016. That means the first IFRS or IndAS compliant